Exercise 6.5, the last part, asks us to do the weighted average. Well, let's go back to this and to come up with a weighted average cost. And when we say that, we're saying every unit we purchased, no matter when we purchased it, we bought it at the same exact price. And the weighted average is 2105, the total goods we had, divided by the total number of goods, and each of those units cost us $20 and 4762 cents. I just simply took 2105, the total goods we had, divided by 105 and come up with $20 and 0.04762 cents. That's 20.04762. Okay? Every unit cost us that $20.05 roughly. Every unit, whether we sold it or it's still in ending inventory. So, we need to fill in this silly chart, even though we're really only going to use the bottom part. The total number of units was 105. The total cost, 2105. The weighted average cost, 2105 divided by 105, 20.4762. And we can fill in these numbers if you like. If you're like most folks, you like to have all the little blocks filled in. Personally, if I didn't fill in all the little blocks, I probably couldn't sleep tonight. I mean, they're blocks. They're empty. You got to fill them in. It's like the law, the rules. I don't know whose rules, but somebody's rules. Okay, so that's our average cost per unit. So each one of these units, the weighted average cost for each unit, whether we still have it in ending inventory, whether it's our 24 units in ending inventory or the 81 units we sold, each unit we're going to act as if we paid $20 and 0.04762 per unit for every unit. Now, once we have that number down, we can do our revenue, our gross margin. At least we can if I can ever get these papers apart. So our ending inventory is 24 units. Times 20.04762. And yes, I would not round it off until the very end. And at this point, that comes to $481.14. And then our cost of goods sold is 81 units at 20.04762. And that comes to $1,623.86. My down and dirty method of subtracting 481.14 from 2105 would give you the same number. Our sales revenue, and again remember, revenue doesn't change, doesn't matter what method you use. We sold 81 units, and each unit we sold for $30. So that's still $24.30. Gross profit or gross margin will change. Our revenue is $24.30. Our cost of goods sold is 1623.86. So our gross profit or gross margin, 806.14. Now, let's take a look at the gross profit under each of the three methods and see what we come up with. Our gross profit under weighted average, we just did that, is 806.14. Our gross profit under LIFO was 849, and our gross profit under FIFO was 757. Now remember, in this case, the prices were going down. I want to dig out the chart we did when we did the prices going up, because you're going to see that what's happened this is in a period of prices going down. This is in a period of prices going up. Now, the only thing that I need you to see is that when prices are going up, LIFO gives the lowest dollar net. When prices are going down, LIFO gives the highest. Weighted average always falls between LIFO and FIFO. And you need to know all three of those methods. And you have to make sure that you know if prices are rising or falling.